Hey, good morning. Just got to figure out why the cam ain't working. All right. Now we got that going. That's all right. All right, I guess that's a good time to go. Hey, good morning. How are you? Let me pull up the chat. I don't quite know. I've already lost it. There's too many numbers. All right. Well, pull it up. And then we'll go. And so, hope you're having a good day. It's a Monday. Another good day to be alive, and in particular as a currency trader. Welcome to Forex.Today, the YouTube community of more than 21,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of planning our trades in advance. Because trading is risky, not appropriate for everyone, your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Let's go! So, guten Morgen. All right, today we're going to use traders.com, which automates your research. Imagine things like being able to put your thumb on the pulse of the market by reading the real-time sentiment. How about having things like a live squawk box? That usually costs $100 a month, $200 a month, $300 a month. But also having artificial intelligence read articles and translate them into a currency or other asset bias. What do you think about gold? Well, what about 9 websites that have written 47 articles about gold over the last 7 days? What's the sum of all those articles? And how's that changed over the last 90 days? Oh, we have all that data. Hey, do we have Aussie jobs coming out? Yeah. Does that move the market? If so, what direction? If the news is good, what about bad? What about as expected? What's happened in the past? Do you know the last 12 Aussie jobs reports? Have you broken them down on multiple time frames on different assets, looking at the actual volatility and the direction? We have. You know the implied volatility at all for any of these assets, when you should be trading and when you should not be trading every single major asset that you look at? Well, that's all under sentiment. Under fundamentals, that's our database. We log into all the central banks around the world and we pull the data out. CPI, PPI, PCE, GDP, all that kind of stuff. But then we do comparative analysis between the UK and the US. Should pound dollar logically go up or down? Who's winning the war on macro? What about technical analysis? We look at 7,500 charts in real time looking for the top 20 most reliable, repeatable patterns. So now you can do all that in seconds. We have performance coaching. Hours and hours and hours every day of performance coaching. Focus on Forex, sure. But the stock market as well, crypto market. If you have questions about trading with options, we got somebody for you to do that. Price action. Market opens. I just happen to be a Harvard-trained economist. I can answer your questions there. And then, look, that's not good enough. Guess what? You trade through us. At the end of every day, we give a little bit of your spread back to you, making every trade you make a little cheaper. Isn't that cool? How do we do it? We actually just put some cash into your account. Not a credit, an actual cash. Oh, well, that's helpful, Wayne. Of course it's helpful! So, let's start with our macro. Actually, you know what? Before we go macro, let me just do it. Go to our headline radar, and then we'll do macro. The Monetary Sentinel, another loose hand from the RBA. US dollar, Canadian dollar technical outlook, testing the 200-hour MA after bounce from June lows. NASDAQ futures analysis for today with Trade Compass.
Shares of Tesla slump as Elon Musk keeps his focus on politics instead of cars. Australian dollar US dollar declines as market braces for RBA rate cut amid rising trade tensions.
FTSE 100 trades below the flat line. Silver slides as a rebound in yield supports a stronger US dollar. Gold dips as stronger US dollar rises on Fed stance and trade hopes.
Euro US dollar price forecast, bears aiming for 1.140.
U.S. Treasury SEC Besant will have several trade announcements in the next 48 hours. Cool. Retail sales out of Europe came out 1.8. Last month it was 2.7. Holy smokes. Coming up later today, we have the RBA interest rate decision. And then tomorrow, IVPMI out of Canada. Cool. Very nice, right? Looks like CAD yen, we got, look, bullishness with an opportunity on the hourly chart. Isn't that nice? All in one page. Let's quickly look at all the markets here. Pound dollar down. Okay, Kiwi dollar down. Gold down. Euro dollar down. Looks like some dollar strength, huh? Aussie dollar down. Okay, silver down. Look how fast I can go through these charts. Boom, 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 boom. USD CAD up, which is exact opposite. So how do you use this information? Well, if you want to continue to the upside, based on what has happened to USD CAD in the past on Mondays at this time of day, it's suggesting, well, something like that. Cool. Isn't that nice? Yeah. But anyways, let's do our macro. Let's do the macro again. Okay. Macroeconomics. Monetary policy, inflation, GDP, all these fun things. Load in, load in, load in. Okay, this is where you get your risk on or risk off data. So I asked you to fill out a form on your opinion. Let's take a look at that. See how you guys are feeling. 60% risk off or very risk off. Well, let's see what the data suggests. 10-year T-note, 4.35. Look at that. 67 and a quarter. Holy smokes. Oil on the fly. Gold still coming down 3,300. It's been falling for a while. S&P 500, remember my target is 6,700. Well, it's up a little bit. Okay. Dollar up a little bit, and Bitcoin 108. 108. Yeah. So the stock market seems to have some decent macro in there, but you got to pay attention to changes in seasonality. And Swiss franc, look at that. Swiss franc looks kind of interesting. Most of the stock markets have stabilized, but many have not gotten back above their watermark for the year. Just looks like the United States has. Everybody else, not quite. Do a deeper dive into the risk gauges. Look at that. 2, -50. Mixed bag. VIX up 6%. Yields up 5%. S&P 500 up 1%. Dixie 0.5 for the week. 10-year T-note. Yields are up 2.76 for the week. Yen, 0.5% down. Gold, 0.2% up, and put call ratio favoring the what? The puts? Gee whiz. Golly gee whiz, Batman. And then a very quick look at our scatter plot. It's not done loading. Come on, scatter plot, load, load, load. Scatter plot. Scatter plot. Well, we'll let it load. What I wanted to look at is just dollar only. Dollar stronger than rands, dollar stronger than yen, dollar stronger than Swissy, dollar stronger than Kiwi. Okay. Dollar stronger than yen. So dollar currently has some strength built into it. Not sure why it's not loading properly. But whatever, we got to move. Commitment to traders report will update later today. It's delayed because of the holiday, not because of me, not because of our platform, because the Commodity Futures Trading Commission, the CFTC, has not released the data yet. So that's that. Now, I've already spent about an hour and a half going through all the fundamentals, so Yeah, that's what we do at TRADARS. Yeah, cool. So we're going to do euro dollar. Let me set that up. Now, what do you think about euro dollar? Are you into it? What's going on? So what we're going to do today is euro dollar, Bitcoin, 10-year T note, gold, S&P 500. We're going to look for trending patterns and reversal patterns. So only the top 20 reliable, repeatable patterns. And we're only going to do the 15-minute, the 30-minute, the 60-minute, the hourly, the 4-hour, and the daily charts. Okay? That's pretty good, isn't it? So 5 observations for 1, 2, 3, 4, 5 assets. So that's 25 charts looking for top 20 reliable, repeatable patterns. So that's 500 charts we're going to cover today. You're like, Wayne, 500 charts? That's cray. That'll take hours. No, it'll take really just minutes. I could probably do it in 2 minutes, but I'll take my time. So you ready? Let's take a look at what we see. Euro dollar. Okay, we're looking at the 15-minute, the 30-minute, the 60-minute, the 4-hour, and the daily chart. You're like, no, Wayne, I only see one. Yeah, well, there's only one reliable, repeatable pattern. That's a down channel with an opportunity for bears. Okay, you got a heads up about 5 hours ago. That's when TRADARS put it up here. And next leg down, okay, looks like 116. Maybe even a little bit lower. A lot of vol on this right now. Yeah. Choppy, especially over holidays. You get thin markets. You can see the spikes and all that. Okay. Cray. So now I want to do Bitcoin. Okay. What do you guys think about Bitcoin? You guys excited about Bitcoin? You want to buy it? You want to sell it? Where are we going next? Well, let's answer that question. And there is a 60-minute sideways trend, a 4-hour uptrend. So based on the 4-hour, you want to look at maybe buying a dip. Right now, we are challenging the lower bounds. It's not a trend. Well, it's a sideways trend, so it's not like world's greatest opportunity here. But this is our primary line. What this is suggesting, well, let me reverse that. It's not suggesting it's going to break. It's suggesting if it does break, that's technically important. Okay, if you're a bull, you're going to look at it this way. What this pattern is telling you is on the hourly chart, it's made a lower high, which makes you vulnerable to a lower low. So if you were a bull today, you should be cautious on the hourly chart, and maybe you'll get one of these later. Maybe. We don't know. So that is not a sell signal. In fact, if we look out onto the higher time frame, what we're looking at is if it does not break to the downside, then the actual bigger move is up. So this is what the market is looking at if you're going to continue to be a bull. So use your primary line in the direction of your fundamental bias. So if you're a bull, this is your primary line. The green line is a suggestion. So this is sideways with a threat of breakout in the opposite direction of the longer term uptrend. Okay, you see that? So if it breaks down, that would be significantly important for for technicians, because it'll start doing this on the higher time frame, and that ain't bullish. So you got to be worried that there's a threat here, but it hasn't happened yet. You should just be aware of it. Could you see this as a double top? Well, it's not a double top because it's a lower high. So luckily the machine doesn't confuse it. It's a lower high, no matter how you look at it. But if it breaks, then that becomes a problem. Okay? So it's a heads up. It's like, think of TRADARS as being your virtual assistant. It's gathering all the data. It's looking at all the charts. It's looking for the reliable, repeatable patterns. It doesn't make mistakes, and it'll just point it out to you and say, "Hey, boss, you should check this out." Because the boss might say, "The boss is bullish today." Okay, so this is a threat. But if that threat fails, then that's our next leg up in the uptrend. So you should be ready, willing, and able for this pattern to fail. If you're a bull, you want this to fail, and if so, you're game on here. And your target is 112.5. Okay, you're going for $4,000 if this doesn't break. Not bad. Okay, so I want to do the 10-year T-note next. So let's do that. The 10-year T-note. Why do we care about this? Well, if you're a Forex trader, and this is Forex.Today, what we're trying to do is track the flow of capital over borders. Is money going into the dollar or coming out of dollar? Is money going into Bitcoin or out of Bitcoin? Is money going into the treasury and bond market or coming out? Is money going into the stock market or coming out? And when money goes in and out of assets, and in particular across borders, it changes the value of the currency. So you're like, well, Wayne, I'm just a euro dollar trader. No, you're not. You're a 10-year T-note trader. You're just trading a correlation via euro dollar. But if someone is buying 10-year T-notes and they're foreigners, they need to buy the dollar first. Then they buy the 10-year T-note. If they're selling their treasuries that they bought in the past and they bring the money home, they're selling treasuries, selling dollars. Now your dollar is weak today. And you're like, you only trade euro dollar. No, you don't. Okay? You're trading an observation of something else happening. Nobody actually wants to own the money. Cash is trash. Okay? You know what's better? Owning a 10-year T-note that pays you 4.33. Cash doesn't pay you anything. In fact, it's depreciating at 2.5% a year. You see? All right, so let's get on with it. Lecture over. Okay, we're looking at, what did I, oh, whoa, I got gold on here. I needed to click here. Ha, 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 sorry. 10-year T-note, and the price is rising. Our analysis here is prices are rising on the 10-year T-note daily chart. There isn't much going on in smaller time frames. which makes sense because we just had a bunch of closed markets and holidays and all that kind of stuff. But nonetheless, the trend is up. That means yields are coming down. Maybe the market is betting on a Fed cut in September. Therefore, 4.3 is going to be a good deal because in 1 year, this 10-year T-note will only pay 3.3. In that case, the value of these treasuries won't be 112, right? Here's the entry here, 112. No, it probably will be 175. So you'll collect the interest and have an asset that you paid 112 for, and then you can sell it at 175, and you get to keep that profit too. So your net asset value plus income, your real return could be great. Could be fantastic. And that's what's in play right now, yo. Yields are likely to fall if this continues. Well, yields will fall if this continues. So now you need to understand treasury markets, bond markets, monetary policy, macroeconomics, and then from this, understand the flow of the euro dollar. Easy peasy lemon squeezy, huh? Okay, let's move up to gold. Oops. Gold! What do you think about gold? Should you own it? Not long ago, we looked at gold and there was nothing. You remember that? Was it Thursday last week? There was no up, down, sideways, or reversal patterns on any time frame at all. Now, you're like, well, Wayne, I traded it and made money. Yeah, well, it might have been a dumb idea. Okay? But this is just the reliable, repeatable patterns. Okay? All right. So we're going to look at 20 patterns on 5 time frames. So how long will it take us to do 100 charts? 3, 2, 1. 15-minute is a downtrend with a threat. 30-minute downtrend with a threat. Hourly chart, downtrend with a threat. 4-hour chart, downtrend with an opportunity. So this looks like up and then sell it high later today. Maybe that'll be challenged on a daily, but not likely today. And it's still slightly bullish on a daily chart. But what it's suggesting is gold might come up today and then fall the rest of the week, and then we'll move on. .com done. What do you think about that? I just did 100 charts. Sell a lower high is what it says. What do you think? Does it take you longer to do 100 charts? Do you only trade reliable, repeatable patterns? Or do you look for something to do every day? Do you guess? Do you only trade reliable, repeatable patterns in the direction of fundamentally based bias that you can prove quantitatively? And do you know if the rest of the trading market, which includes commodity traders and options traders and stock market traders and individual stock pickers, and are you paying attention to what they think about or what the media is writing about? Or is it just you having fun every day like a video game? Boo, 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 boo. All right, S&P 500. You ready? Top 20 reliable, repeatable patterns on 5 time frames. We're going to look at 100 S&P 500 charts. Boom! Done. Okay. S&P 500 on the hourly chart is neutral with a slight bias to the upside. On an hourly chart, it's saying, yeah, it might make a high, but it'll wimp out around 62.80. Is that right? Yeah, 62.80. So it is not clear that this market, at least technically, is going to make a higher high. So we're consolidating on the hourly chart here, and it says we might break to this target, but we may not have the guts to go higher today. Now, what if you just jam your stop and let it run? Well, the upside to that is if it does break. So let's go back to here. If it does go to here and it goes to the higher, it goes to 63, which is technically higher than that, then the next leg just might be like this. More likely because of the consolidation. Now, this consolidation might be happening simply because of the holidays. But what if this line continues? That trend. Okay? Then you could expect, okay, the break up, the pull back, and the break out. And therefore, this reversal pattern actually ends up being short term, and we continue mission. So I can't prove to you one way or the other if this is going to happen. This is your job. What's your bias? Okay. Did you spend 2 hours? How about this? Did you spend 1 hour over the holidays on Friday, Saturday, or Sunday reviewing seasonality and creating a plan for this quarter? I did. I spent way more. And so you might have strong conviction or you might have weak conviction. Weak conviction is still at play, which means you can try it and jam your stop. And if you get lucky, easy. But if it fails, okay, your weak conviction says, you know what? I'm out. Give me my money. Come on. So you manage this with risk aversion. You put stops. You don't try 10 times to get into the trade. It either works and you get lucky and you're like, oh, that's cool, or it doesn't work and you're like, yeah, that's kind of what I thought. But if you haven't spent, you were too busy hanging out by the pool, which I did too, to do your homework. Well, I did my homework. Okay. So anyway, yeah, if it breaks, you'll probably get paid. If it doesn't, these are warnings. Do you see that? Up for now, but be careful. Even if we get to that green zone, if we don't make a clear break above 63, it could create a reversal pattern later today and tomorrow. The thing is, that should take you, I mean, I just spent 3 or 4 minutes explaining it. I looked at it and was done in about 5 seconds. Yeah. Cool. So TRADARS, radars for traders. We have sentiment radars, fundamental radars, technical radars, performance coaching. And if you also trade through us, you get a spread rebate so that your trading's a little cheaper. Oh, you also will be able to use MT4 So if you're an American and you're like, oh man, I'm with MT4, swing on by. If you're like, I want to use Wayne's charts, I'll give you all these templates for free. How about that? And I'll make your trading cheaper. How about that? World's greatest sales pitch. I'll make you a better trader, and every trade you make will be based on logic and intelligence, based on market sentiment, macro fundamentals, and a hardcore, solid technical analysis, and you'll spend less time to make better trades. Or stay amateur. You do you. So I love you, babe. I got to jump. That was real. Peace on earth. May the pips be with you. May your profits be above average. I will see you later today at, 4 o'clock, right? Let's just quickly look at that before I go. Cool. Here we go. 4 p.m. I'll see you at 4 p.m. We'll do some day trading, huh? What do you stink? Smell like a plan?